Welcome back to the ICT or SMC Beginners course. Today we are covering market structure shifts. Now, if you want to trade any ICT 2022 based model, you need to understand this basic concept called market structure shifts. Not only does it tell you when a trend is likely over, but it gives you an early indication of a trend reversal or a new trend starting. This allows you to get in the trade earlier and ultimately have higher risk to reward when it comes to trading large market moves. Okay, so what actually is a market structure shift? And before we hop into that, I just want to make sure that you guys understand market structure. So if you haven't seen my last two videos on market structure, both bullish and bearish market structure, it would be very beneficial for you to go and watch those two videos first. But essentially, what you're looking for, as the name suggests, is a shift in market structure. So as you can see here, we're making higher highs and higher lows in this example. So we're going in bullish direction. We're making higher highs and higher lows. So what is a shift in market structure? It's when we fail to make a higher high in this example. So as you can see, this would be where we would expect price to go from here and then ultimately come back up. So to give you an example, this would be bullish market structure to continue. A bearish market structure example would be something like this. I'm just going to change the color here, and we can see that market structure will shift and go below this low. So this point right here is where your market structure shift occurs. This is, by definition, your market structure shift, where market structure was bullish, and now this is the initial indication that price might be starting bearish market structure in the opposite direction. This is where we want to get short. This offers the best risk to reward because you can target this original low down here. That's essentially the basis of a market maker model, but essentially what you're doing is you're looking to get involved in a fair value gap or a PD array somewhere in this down leg here, and you're trying to anticipate where this lower high is going to form, right? Because bearish market structure is going to be lower lows and lower highs, and it's going to look like this. So your job as a trader trying to catch this reversal is to anticipate this lower high, whether that's here or up here. This is where you want to try and get involved in the trade to target these lows over here. So now that you kind of understand this on a line chart, let's go and hop into the example we had below where we started the video so you can see what I'm talking about. Okay, so taking a look at this bullish market structure here, we can see that we're making higher highs and higher lows. And then essentially at this candle right here, we end up getting below this market structure low here, and we end up making this new swing low right here. Now, this swing low is not confirmed until this 1030 candle closes, and now we've made a new swing low. But the important thing to note here is we got below this market structure point. And although we're not going to cover displacement in this video, I do have a video on my YouTube channel already called Market Structure Shifts versus Liquidity Sweeps, which will give you information on displacement, because ultimately that's what you need to see in order to confirm a market structure shift. This is the indication, but you need to see displacement in order to confirm a market structure shift. So, like I said before, your job as a trader is to try and anticipate where this next high is going to be. So we've seen this swing low form, and we're trying to catch this high here. This is going to be your best risk to reward entry. And you're essentially going to try and find this high here, which then leads to this low here, a lower high, a lower low, and so on. We continue to make lower highs and lower lows until we eventually take out these relative equal lows, which would be our draw on liquidity or our sell side liquidity. So how could you have entered here? Well, if we were to hop down on the 5-minute, for example, we can see that there's not only a fair value gap here that overlaps this market structure shift level, but there is also an internal sweep of liquidity here. So if you understand liquidity, this is going to be potentially useful for you, where we sweep liquidity here. But more importantly, we end up shifting bearish structure here one more time. So you can see we shift structure back bearish on the 5-minute. So this would be your 5-minute structure here, high, low, high. Now we've shifted back in line with the higher time frame, so we can look to short. We're going to take our high here down to this low. Anything above this blue line is in a premium and is where we want to short. So you don't even need to know PD arrays in this example. You could just get short anywhere in here. But we'll say at this fair value gap, and we're going to put our stop above the high, and we will get into stop loss placement rules for fair value gaps in the next couple of videos. But essentially, you're going to have your entry somewhere up here. You're going to target these lows for your low-hanging fruit, and then ultimately you could target all the way down at these lows over here. You would just have to hold for over 24 hours, which is not something that I generally like to do. So I hope that kind of makes some sense here. And now that you understand what bearish market structure shifts looks like when we take out the market structure low and we anticipate a lower high, let's go take a look at the bullish market structure shift example that I've prepared. So hopefully this one comes a little bit easier after seeing the bullish example, so it will be a little bit quicker. But essentially for a bullish market structure shift, you're looking for market structure that is bearish. So we're making higher low or lower highs and lower lows, making this downward trend or this bearish market structure. And essentially what you're looking for is this initial leg to push up, or this initial range to push up above this high here. So when we get above this high here with displacement, which is not going to be covered in this video, you're going to mark that out as a market structure shift. This becomes your market structure shift level, and this is the initial identification or hinting towards the fact that we're likely to see a higher low. Because remember, we're trying to catch this next high or this next low, anticipating that we're going to continue higher, because market structure is going to start reversing from a bearish market structure or bearish trend to a bullish trend. So this is what we're trying to anticipate, is this point down here. This is the initial indication that the bearish market structure or bearish trend is over, and a bullish trend or bullish market structure now has the opportunity to start moving higher. So now that this is more clear and you've seen this on a very basic visual chart here, let's go hop into the price action so you can see what it looks like with candlesticks. Okay, so here we are looking at the bullish example on the market, and as we can see, we're in a bearish market structure right now, so we're making lower lows and lower highs, and let's just continue to play this out. We've now made this low here, and we've made this high, followed by a lower low, so we're continuing to trend lower. Made this high here, continuing to trend lower. Let's wait for a swing low to be put in right here. And we can see that we're going to continue lower, and we've now failed to make a lower low, but that's okay. We're still inside of this range from this high to this low. And this candle here actually starts our market structure shift. We don't have displacement yet, but this is your early indication that price is likely to get above this high and might be shifting structure. Now, it's also important to see liquidity sweeps over on the other side of the chart here, and that's not a conversation for this video. We're just talking about market structure here. But as you can see, we get above this high, we get a close above it, starting to see some displacement here, as well as a fair value gap in here. So potentially you're looking to take a long opportunity here, somewhere in this fair value gap. I'll just say right at the top here. Could have your stop loss below this fair value gap candle just like last time. I would probably go below this candle here because there's no wick on this candle. That's just a personal preference. You could target this high here. I'd probably look at these highs over here because they're relative equal. So these highs here look like a nice pool of liquidity for me. This would be my first area of interest, potentially this high here, and maybe even these highs over here to kind of complete this model. But let's see what price does. Make a high here, pull back into the range. We've now shifted structure and we're now making bullish structure. We are potentially in a trade here, continuing to hold fair value gaps and order blocks. Engineered some more liquidity up here. Whoops, I didn't mean to play that, but essentially we end up taking out the highs, even taking out these extreme targets up here, and this could have been a nice possible trade here just simply by following market structure. And in this example, we used the fair value gap, which we will be covering in our next video. So I hope you guys found this useful and insightful. If you do have any questions, make sure to let me know in the comment section down below, and I will do my best to answer those. And until next time.